You've really got to hand it to the S&P, haven't you? I mean, it has been a little star. Unlike the European markets, which have been showing a bit bearish chart patterns, the S&P hasn't. The S&P has been showing a continuation pattern. And the reason for these continuation pattern is this. It's when the markets get a bit carried away. You can see here, okay, on that move up from just below the 2000 mark, you see it's gone straight away up, and here is where it gets a little bit overextended, so then it goes sideways. Now sideways patterns, continuation patterns, sideways, it's a very good, oh get away, it's a very good pattern, is a sideways pattern, because what it does, it does its job. It goes sideways and it's like a pause for breath. It's like, okay, I'm a little bit overbought, I'm a little bit overextended, I've run up that great big hill, I'm a little bit tired, tell you what, I'm going to take a break. And that's exactly what it's done. And what it's done is it's actually stayed within quite a extensive range that's been so blatant that even I have sat there and gone, oh my god, can 2160 really hold it again? And it's done it. So let me show you on an hourly chart. You can see it a little bit better there. You see where it just hasn't deviated. Let me just get those little things off there. It really hasn't deviated. It's just gone up, down, up, down, up, down, up, down, and that's it. It's stayed within its continuation pattern. And even in this continuation pattern, you can see that when it gets to the bottom, we're oversold. Up we go, we're overbought, you know. So this is really how you can trade this pattern at the moment. Bear in mind, a continuation pattern is exactly what it says. If I take you back to the daily chart, you can see exactly what I mean. So what we hope, or what continuations pattern do, is they should continue in the direction of the previous trend. So look, we've been going up, we've done this continuation pattern. Now what this means is that we should break to the top side. Now the thing with continuation patterns rather than topping patterns is that continuation patterns take longer to form than topping patterns. They normally go up, make a top, come down, go back up, make the double top, come down, and then they fall. Well, a continuation pattern doesn't do that. It takes a little bit of time, and it, you know, does what it's supposed to do, and it can go sideways. Markets can go sideways for quite some time. But we have eased the overbought, oversold indicators on the stochastics. Our RSI is at neutral. Even our little MACD is like, doesn't know really what way it's going to go, which is exactly what we want from a continuation pattern. We want it to come back, to pause for breath, to ease the overbought scenario. We want it to stay range bound for a few days, a few weeks, and then it's got enough legs behind it so that when it does make the break, it is a sustained break. And we know when the break is going to come, because if we do break 2180 on the S&P, we're going to go higher. Now the next level I have on here is 2195. You know where we've done these Fibonacci extensions, and the next Fibonacci extension on that is 2195. So there's absolutely no reason we can't get there. The only time we're going to look a little bit iffy, a little bit toppy, is if we break through 2155 and stay there. If we do that, we're going to come back down to the 2142 to 2136 support area. I think that'll be enough to hold it, to be fair, for the time being. So then we might have another little sideways step, and we make ourselves another new little range of 2160 to 2136. Obviously the jury's out at the moment, because at the moment we're still staying within the range, and we should play that range until it breaks, and not just breaks conclusively, not just blips. It can't go to 21.78 and puke. It's got to go, and it's got to break 21.80. Then you're going to see buyers coming back into the market and to drive it up to its next level of 21.95 to 21.99.